Hello, everyone. This is an SAP FICO training video. Within SAP FICO, there is fixed assets. Within fixed assets, there are business transactions. 20. Today's date is October the 30th. And this is based on SAP S/4HANA. If these videos are helping you in your SAP training, FICO training journey, please like, subscribe, share, and comment. Let me know how you're doing. What kind of day are you having on a scale of 1 to 10? 1 being the worst, 10 being the best. What kind of day are you having? I hope I see a lot of 10s. As you all know, I like to format my information in question and answer format, so I'll do that when appropriate. If the information I'm giving you gets a bit too technical, I'll just outright give you the information as to not cause any confusion. Without any further delay, let's get into it. What are the business transactions related to fixed assets? Acquisitions, transfers, retirement, and manual value corrections. What happens in real time when a business transaction posts in fixed asset accounting? Each transaction posts in real time in all ledgers. The ledgers are mapped to depreciation areas. In SAP ERP, did all of the ledgers post in real time? No, only the leading ledger posted in real time. All right, our focus now is on acquisitions. What is an acquisition? The process of acquiring assets, either procuring them from external sources or creating them internally. Procuring means buying. What is the asset master record when it is initially created? An empty shell without values. When does an asset master record receive its values? When an acquisition is posted with its depreciation rules. What is the most common process in the acquisition of assets? Purchasing. What is the typical flow of the purchasing process leading up to the acquisition of an asset? Purchase requisition, purchase order. Asset number is assigned to purchase order. When is the asset capitalized? At the time of the goods receipt, valuated goods receipt, or at the time of the invoice receipt, non-valuated goods receipt. Outside of using a purchase order, how else can an asset be entered into the SAP system? Directly in financial accounting. When an asset is entered directly in financial accounting, what does that process look like? The vendor invoice is posted. The vendor invoice debits the asset using transaction type 100 for external asset acquisition. When is assets under construction used to acquire assets? When an asset is not procured externally, but instead is created internally. Where is the account determination setup for fixed asset accounting? In fixed assets master data. To enable the acquisition processes in SAP S/4HANA, what must be configured? A technical clearing account. Menu path to define technical clearing account for integrated asset acquisition. Financial accounting, asset accounting, integration with general ledger accounting, technical clearing account for integrated asset acquisition, define technical clearing account for integrated asset acquisition. Select new entries. Assign the clearing account to your chart of accounts. When posting the acquisition, the system will offset the vendor line item with this technical clearing account. Instead, similar to how the GRIR clearing account is used. I do have a video out there on goods receipt, invoice receipt, explaining that process in depth. Go find it if you want to get a good look. It'll help you understand a bit of this. Moving on. Information I need to throw at you. The invoice posting will be the same for all accounting principles. The valuation may be different in the various ledgers because different accounting principles will likely require different valuation approaches. The system will post separate documents for each ledger in which asset line items will be offset by the same technical clearing account. In the end, the balance of the technical clearing account will always be zero. This value will not be included directly in financial statements, only in the notes for financial statements with zero balances as auxiliary accounts. Alternative document types for accounting principle specific documents must be defined. Menu path to define alternative document types. Financial accounting, asset accounting, integration with general ledger accounting, integrated transactions, alternative doc type for accounting principle specific documents, specify alternative document type for account specific documents. Okay, this is the original document type. This is the alternative document type to be used for the accounting principle specific entry to be created for each non-leading ledger. Some companies may require different document types with different number ranges. If not, standard document type AA can be used. This concludes acquisitions. Now we'll cover transfers. Focus now is transfers. What is an asset transfer? The process of transferring an asset to another asset number. Why might an asset transfer be needed? If either a change in its cost assignment has occurred or asset is being transferred to another company code. Menu path to change the cost assignment of an asset. Accounting, financial accounting, fixed assets, posting, transfer, ABUMN, transfer within company code, or use T code ABUMN. This transaction retires the asset being transferred and capitalizes the new asset. The new asset can be created before using the transaction or created automatically via the transaction. Moving on. Menu path to configure predefined transaction types for acquisition and retirement. Financial accounting, asset accounting, transactions, transfer postings, define transaction types for transfers. Here are the settings that define an asset transaction type for transfers. This is the lower part of the same screen. Okay, transaction type for transfers, standard information. So as far as retirement is concerned, 300 is for prior year acquisitions. See this transaction type here, 300. That's for prior year acquisitions. 320 is for current year acquisitions. 320 current year acquisitions. All right. As far as acquisitions is concerned, 310 is for prior year and 330 is for current year. Okay. If custom asset transaction types for transfers are needed, the best practice is to make a copy of the standard transaction and start the new transaction with Z. Don't customize the standard transaction types because the customization will be lost during updates. An asset transaction type always belongs to a transaction type group. Notice how type 300 belongs to group 30. Do not change these groups. These groups are standard. When copying a transaction type to customize, choose the type to copy from the existing standard groups that matches your custom type the most. This checkbox is selected when the asset should be deactivated after retirement. This checkbox determines if this transaction type creates a credit or debit. The transaction will create a credit for retirement. This section determines if the transaction is an intercompany transaction or not. Based on our selection, it is not. The post-net selection indicates the net value will be transferred. This means the acquisition value minus the posted depreciation. Post gross obviously does not require a calculation. Checking this box prevents the transaction type from being used manually. If checked, this transaction type can only be selected internally by the system. The related consolidation type must be selected so the system's consolidation functions can work. The asset history sheet group will be discussed in the Fixed Assets Information System training video. Note the setting is made here. Moving on. Why do intercompany asset transfers? What do intercompany asset transfers accomplish? They transfer an asset from one legal entity to another. What does intercompany asset transfers usually involve? Issuing intercompany invoices. Menu path to define an asset transfer variant. Financial accounting, asset accounting, transactions, intercompany asset transfers, automatic intercompany asset transfers, define transfer variants. Click the transfer variant option. Here's a list of the SAP standard provided transfer variants. These variants can be copied and customized as needed. Transfer variants can be gross or net. Gross values include posted depreciation. Net values don't include posted depreciation. Click the gray box to select 7. Gross variant. Double-click Maintain Allowed Entries. Here, you configure the retirement and acquisition types to be used in the case of legally independent units and in the case of a transfer of only one legally independent unit. 1 is used for legally independent and 2 for legally 1 unit. You can specify a cross-system depreciation area or enter an asterisk, which is valid for all cross-system depreciation areas. Select a transfer method. Enter retirement and acquisition transaction types. This concludes transfers of fixed assets. Now we will cover retirement of fixed assets. The focus now is retirement. What is fixed asset retirement? The process of an asset being sold or scrapped and deactivated in the system. When an asset is sold, how is revenue recorded and posted? A customer invoice is issued and posted. After an asset is sold and the customer invoice is issued and posted, what does the system do? Compares net book value of asset to selling price, then posts gain or loss to configured accounts. When an asset is scrapped, how much revenue is generated? None. When an asset is scrapped and an outstanding net book value exists, where is this value posted to? The loss account assigned in the fixed asset account determination. Menu path to check and configure general ledger accounts for retirement postings. Financial accounting, asset accounting, transactions, retirements, assign accounts. Select the chart of accounts, the account determination, and the depreciation area. The asset retirement account determination alone will be displayed. Let's walk through these. This account is used to post loss in the case of scrapping. This account is used to clear the net revenue from asset sales. This account is posted to when the revenue from the asset sale is higher than the book value of the asset. This account is posted to when the revenue from the asset sale is less than the net book value of the asset. This account is used to clear the revenue from the sale of the asset to affiliated companies. Moving on. Menu path to check the retirement transaction types. Financial accounting, asset accounting, transactions, retirements, defined transaction types for retirement. Note, only the retirement transaction types will be displayed. Double click 200 retirement without revenue, and that will bring you here. Okay, the standard transaction type is used in the case of scrapping. This transaction type deactivates the asset, uses document type AA, and does not select retirement without revenue. And thank you all for your time. That concludes this SAP FICO training video. If these videos are helping you on your training journey, please like, share, subscribe, and drop a comment in the chat. Let me know, what's the temperature outside? Right now in Illinois, the temperature is roughly 75. That's hot. In fact, that is up 19 degrees from average. Okay, you all. Thank you all for your time. And as always, peace.